Hi class, let's start the chapter. Okay, this chapter, what we're going to talk about it is the action that usually happens in a softwares or in applications when you are making a sales from accounting point of view. Now, so this chapter talks about sales and collection business processes. What we're going to talk about it is describe the business activities that comprise the sales and collection processes, and then develop an activity model of the sales and collection processes or process. We try to understand and apply different activity models, develop business rules to implement controls for the sales and collection processes. We will use a develop and structural model for sales, for the sales and collection process using UML class diagrams, and probably use a multiplicities to implement foreign key in relational tables, implement a relational tables database for the UML class diagram for the sales and collection process. And that's usually when you're doing an analysis for your softwares for the accounting information. Now, most of you took accounting 1 and probably remember this. When you make a sales, how you post it, you post account receivable if you're not getting paid cash. In the account receivable, let's say 1,350 and 54 cents. Out of 1,350 and 54 cents, you have what you call the sales part of it and tax payable, because you're collecting on behalf to pay the taxes also. So the sales tax payable is 104 cents, and sales is 1,250 and 50 cents. You have to balance these things in your ledgers and account receivable. Now, when you start collecting cash, for example, you do receivable as a cash and taxes. Let's say that your cash, you received 1,452.87 cents. Out of that, there is a tax payable, sales tax payable, which is 107.67, and you put the the credit and debit part of it. That has to be a balance of total. And so when you do that, probably there is a cost of goods sold. Something is going out of your warehouse, and you have to calculate the cost of the goods sold, and is because you need to eventually want to calculate the profits. And it's like here in this case 750.30, and your inventory reduced by 750.30. And let's assume you receive the cash from the account. So there is an account receivable now, and you receive the cash. So you credit the cash 1,000, debit the cash 1,350, and credit the account receivable 1,354. This is because what you did on the top here. So this is what usually happening in sales and collections accounting, in manual and even in electronic. Now, to the next step, let's assume that you have something called sunset graphic business. We used it, but we didn't talk about it. We took, but this from start from here talking about it. In the sunset graphic design and sell is basically they sell some kind of products and there is a graphics on it. Let's assume is a canopies with a graphics on. So they have a sign and a banner, and they letting and vinyl graphic for vehicles and boats. That's what they do probably. There is a corporate promotional items that they have something like that, and skills, T-shirts they do, and other products that they do graphs on them. And how do they do the business? Is Sunset prepares a quota for products and services to be provided to the customer. So there is you go to the customer, the salesperson, tell them about their products, and they agree to look at a quota, for example, certain quota. So Sunset prepare a quota. Customer, after the quota, customer place the order for all or part of the quota, product and services. Sunset orders any product not in the inventories from their suppliers outside the sales process. So there is part that they have in their inventory. If they don't that part, some parts they will order it from outside. Then when they order it outside, they bring it in and they apply the graphic on it, whatever on it that customer is requesting. Then the Sunset company will deliver the product to the customers, and same time Sunset bills the customer for this and collect the payment, whether cash or account receivable. So we spoke about the BPM, and basically all these things can be summarized here. Is the first, you provide the quota, and then you receive the order. That's for the Sunset. That's customer request a quota here outside, and then you provide the quota, you receive the order, you prepare the product, you apply the graphic on it, you deliver the order, you invoice the customer, and you receive the payment. So there is a customer request quota part, and there is a sales record available also. More details or refine what's happened if we said that there is two pool, and then we're not going to look at the details of the customer pool, or we'll look at our pool, which is Sunset. So we definitely know that the customer we had some kind of communication with the customers, but we look at our own activities, which is providing a quota here. And then we receive an order from the customer, we prepare a product, apply a graphic, we deliver, message follow should be labeled there, it's being delivered, what kind of, an invoice, and then we get the payment, and this is where it's closed. So the collaboration sales activity model emphasizes the choreographic, the message flows between the two pools, but we don't focus on the other party pools, and leave the customer pool, blank. Now, if we go in the details in our pool, once we receive the order here, after we get the quota, we check the product availability in warehouse, whether we have it available. If it's available, we say that this has a two-part of the answers, always with this sign here. It's two-part of the answer. If it's yes, we take it and we apply graphic. If it's no, we apply the purchasing process and notify the customer that we don't have the product yet, the option, we'll do the purchasing and then apply the graphic, or if it's not available at the due date, we notify the customer it's not the product available, and that's done. But if we can purchase it, then we do, there is a different activities of purchase. We apply the graphic, we deliver the order, we invoice the customer, and we receive the payment. And this is the end of it. So considering the exception to the process here in the purchasing, show the process flow when the supplier does not have the product necessary to fulfill the customer's order. So there is a certain process for whether we notify the customers or we do the process of purchasing, but we notify the customer we don't have that order because we don't have the product, and that's an exception. Now, that's done manually. Let's look at it if we're going to do it over the internet, the model that's happening over the internet. So the customer goes to our website and, you know, there is a cart on the website and adds a selection to the website, maybe with a different type of selections, coloring, all these things. Once this is done, we get it here, but before we do anything, we're asked to process the credit card payment. So the credit card payment happening. Now, if it's not authorized, then we decline, cancel the order, which is comes in here. And if it's happened, then we prepare the product, apply the graphic, and then we ship the order to the customer and close. So Sunset Plans is to implement internet sale. The customer would pay by credit. Order are canceled when the credit card payment is denied. And also order can be canceled when the product is not available. But on the internet, we can connect it to the warehouse to find out whether the product is available also. Anyway, so here what's happened is refining the internet sales model is basically process credit card payment. If it's happened, we continue. If it doesn't happen, what will happen is the order canceled. So adding selection to a card could be prototyped as a looping activities. So we might be adding more and use different credit card. One incoming customer selection information at the first level, and then approve the payment information continues to the normal process, and alternate path if the customer credit card payment is denied and process approved. It might be different type, you just decline it in the process aboard, or you're requesting for him to come and pay cash, or a certified check probably delivered to your mail. These are business rules for internal controls also. So the business rule help ensure that the information system operate in a consistent and effective manner to achieve the organizational objective. So we're selling. And if we're not getting the money, then we are not selling. Basically, is that. But how are we going to collect our money? How are we going to collect our payment? How are we going to deliver? This is all done through a business rule. Business rules are constrained the process. So you put the process there, and there is what if, which is constrain the process, which is, in this case, if it's the credit card decline, then, that's the constraint of finishing the process, for example. Business rule implements control activities such as we saw the approval, authorization, we're looking at it, verification, we will talk about each one of them, and reconciliations. We also look at the review of operating performance and security of assets and segregation of different duties. When we look at an application, there is part we can see, part we cannot see, part we're allowed to do it, part we're not allowed to edit it. All these rules and regulations, probably business rules for internal control. Now, establishing business rule for sunset sales in this case, first, we need to identify the three elements. We need to identify the event. What's the event? Event is buying some kind of product with the graphics on it. We need to identify the conditions when they can buy and how they buy, and the action is on behalf of it from the customer and from us. We also need to identify important business events using the BPM and diagrams, business process model. And we need to define the condition that might affect the objectives for each event. So that each event, if this happen, we'll do this. If this happen, we'll stop it, abort it, or adjust it, all these things. And determine the appropriate action for each condition. As I said, if this happened, that happened, what we're supposed to do. If that happened, what we're supposed to do. Also, we need to look at the access control, limit who can use and change the record in the system, and application controls, ensure the data integrity and an audit trial. Now, this is a sample of a business rule between order, receive, and quota. This is a process steps. In the providing quota, what is the intention? The intention is to provide quota promptly and accurately. So you're not, when somebody is, promptly, it means how many days or right now. Then the next thing, the intention is that the partner authority and action, what they are allowed to do it and what they are not allowed to do it. Partner, for example, must provide a quota within 1 business day of the request. Manager must approve the quota if it's more than 5,000 or 2,000 or 4,000. It is the company's rule. So manager must be, if it's less than 5,000, it's automatically the quota goes to the customer. Maybe you get a markup of price or you have the same prices where you have a discounted price. In this case, with the quota, there is an access control. Partner preparing the quota cannot modify the established product and service prices. So they cannot change the prices in this case, for example, and cannot say, well, okay, so he's asking for a red color, we'll give him, we can modify it to a yellow color, for example. And there is what you call the application control. So when the partner receives it, he looks at it and he says, red t-shirt. They cannot change the color. For example, you choose maybe the red, you don't leave it as a red t-shirt, you leave it as a t-shirt. The graphic, you might want to change it or not change it. It's up to the rules of business rules. Then the application controls, and which is the system must provide quota number control. Which number is that? Which quota is that? The number for the quota. The default values, how much is 10,000, 5,000, 4,000, 3,000. The range and the limit check. They create an audit trial so we can follow who did what, who did adjustment, and audit trial. Now, the second part of it is, let's say, the received order. The intention of received order is record order promptly and accurately. That's part of it. And ensure the customer credit are authorized. These, when you get the order, you cannot process the order if the payment is not authorized. and record it accurately. You can audit it later. Partner must record the order within 1 hour of receipt. So you want your partner recognized within 1 hour, otherwise you might be having some kind of an escalation in the situation. A manager must approve order if it's more than 5,000. Manager must approve the credit order if it's more than 1,000. These are rules that you're putting in. Now, who has the access? Who has a control? Well, the partner will be accepting the order, cannot modify it. We said establish a product and services once again. Partner accepting the orders cannot approve the request customer if it's a more than $1,000. So if it's more than $1,000, more add-on or something like that, it has to go through the manager. And who has the application control here? System must provide an order number control, default value, how much is it, range, the limit of checks, what kind of things that you need to check the range of it, and you create audit trails always, and system links quota to order. Quota to order, so you can understand which quota belong to which order. Excuse me. This is what you call application controls. Here we spoke about it, application controls, the last part of it. Who has the application controls? Or what kind of a role? Or what is it? Application control could be the field check, the validity check, and the limit and range check. The field check ensures that each entry is the correct data type, such as numbers or date. So you cannot put a number in a date instead of date and date instead of number, date of order, date of submissions, or which order number. That has to be, each field should check, and could be names. You cannot put, for example, email address in the names place. These are things that usually each field should be having some kind of control there. And then you have what you call a validity check, which is ensure that each entry contain acceptable values. So if it's a dollars between 1,000 to 5,000, more than that, it would not accept that value and wait for approval. And it's usually you have by a drop-down list or a calendar also. And then you have the limit and range. This is $1,000 to $5,000. But validity check is ensure that each entry contains acceptable value, often drop-down list or a calendar or a selected date. And then in the limit and range check, ensure that entries are within the appropriate limits. Like, for example, there is a limit check to ensure that entries are less than an upper bound. So they should be less than an upper or within that range. Range check is ensure that the entries are between the upper and the lower bound. And more sophisticated system is according set to the limit and range based on the contents that you are ordering. So in a limit check, for example, should be no less than $5,000. I mean, $1,000, no less than, and should not be more than, above the $1,000 or less than $50, for example. In the range is between $50 and $1,000. And there could be a combination. So if you are making bigger orders, smaller orders, more sophisticated orders, that's what we call more sophisticated. That's a limit range for them. Then you have what you call reasonableness check, compare entire in one field against a related field to ensure the value is reasonableness. So just in case you are entering, you want to enter $100 and you just press on the zeros and keeps going on 6, 7, that's unreasonable, would not accept it. Or when you do, for example, a phone number, reasonable is probably between 9 to 12 numbers, something like that. And then what you call completeness check, ensure that all required fields are entered before the record can be created or updated. So you sometimes you go on the site, you enter information, you notice and it says these fields are missing or is not entered properly. Here's an example that we look at it is input mask ensure property format. You have format for properties, and then you have a default value use the date, for example, um, function to set the default today date, validation rules, and these are different things that you put enter. So validating text in the message. So one field, when you're creating one field, you need to make sure all these rules are implemented. Order must be dated today, for example. So these are all these things. It's constraints that you built in for each field in it. Using access calendar control for the date, you done that, you drop down the menu and you select the date. So that will avoid whether you're using month, day, or a day, month can help you to avoid that also. Access calendar control bring up a calendar during the data entries so the user can select a date rather than entering it. You could be entering it by mistake also. And then you have what you call the access combo to ensure validities. And not to worry about this so much, except that you need to enter two field in order to reach to the the list, the customer number, or the something like. You probably need to enter the name and last purchase, so you can enter these and get the or you have the user sees possible entries from the table. You have probably a table of customers, so you can, with this combo box, is can enter the name, can enter the number or the first name, and you get the whole list also. Uh, Field properties for the order total amount field is set the upper bound. You put the rules also. These are all preset rules. The valid, it should be less than, for example, as I said, you cannot push one and you just sleep on the zeros. It would not accept. So the validation, it shows how much you're ordering as a money. Now, the sunset graphic, back to the example structure model, we use what we say a UML, which is a UML. It is, once again, is Unified Modeling Language, stands for Unified Modeling Language. It's a standardized model. Language consists of integrated set of diagrams, as we show you, developed to help the business modeling. These diagrams help you to do a business modeling, also help the programmer to program this software or modify the software also. So the primary purpose of UML model of the sales here and collection process is to create a blueprint for the development of rational. You want to build a database, and so you need a UML, so where they can dig in the information for each one. To develop UML class diagram is a proven approach to describing a business process in a way that meets both the accounting and the board management information requirement. So here, when we're gonna define the business relationship. Each sunset partner may participate, we say, the rules in a minimum of 0 quotas. They don't want any quotas, or they can have 1,000 of quotas, many quotas, or they can have, say, daily, they can have 2 quotas. You have to put a rule, but each quota involved only one sunset partner. So each quota request, you don't want to have them sent to from too many partners. You select, if you have one partner, that should be one sunset partner. If you have too many, then it could be coming from them and screen them and then submit them. Or certain quota is supposed to go to certain partner to quota. Each customer may participate in a 0 to 2 many quotas, and each quota is prepared only for one customer. These are, business rules by Sunset as example in the quotas. Each quota specifies prices and quantity for at least one product. So you cannot have the empty quota. We can look at this models is basically there's a product available. We create quotas, and the quotas done by the employees and the customers, the both can see them. And once it's approval, this is the process. Process one, there's employees, there is a customers, there is a quotas, and there is a product also. So the quota is related to the 3 other class in this diagrams. First, indicate each quota is provided by one and only one employee, which is we said the partner. Each employee can provide minimum 0 to maximum of many quotas. This is the business rule. The second, number 2, which is the customer, they indicate that each quota is delivered to one and only one customer. Each customer can receive a minimum of 0 to maximum many quotas. And number 3, which is indicate that each quota involves one or more products. Each product can quote a minimum of zeros and maximum of 0. If we don't look at each case, if we don't apply these rules, what possibility things might go wrong? So we can analyze them. Now it can get more complicated, which is, number 4, which is orders, and indicate that each quota can result in a minimum 0 orders and a maximum of many orders. Each order is related to a minimum of 0 and maximum of 1 quota. Each order of 0 or maximum of 1, not many. Let's assume different. We adjust this rule. What will happen in this case? If we add the cash and then it got more issues, so we're not going to get further with that as now. So the type images for categorical information. There is, you will find there is some certain images there. So the type of images applied as a guideline, um, constrained, descriptive, the question mark, informational, to their resources, event, agents to help many manage the business process. Please, when you're ordering a question or you're entering the information, it will prompt you to something and tells you the next thing you're supposed to do. And then you have what you call type images, also supported to summarize the economic activity sold, delivered, to support the collected management information requirement. And type of images allows basically product categorization, what kind of categories there's, order status summaries been ordered, delivered, all these things, assignment of partner to manage a product categories also. All these will be put in the database when we do a database planning support about it. So the database will contain one table for each class, plus one table to support many to many relationship. So one table for each class, and there is tables and each bunch of columns and rows. This is a table, and there's many, so it's a many to many. But we need something called uh, multiple key, foreign key, main key, which is multiplicity is it is indication location of foreigner key to one to many association, indicating linkage table for many to many, because you have two tables, many tables, they should have a common key between two tables in order to connect to each other. Tables find each other, that this table can is an associated with a certain table. We can bring some examples of that. In generic sales and cash receipts, we said that each customer participate in minimum zero or a minimum of zeros and maximum of many sales. Each sales involve a minimum of one and maximum of many inventories items. Each cash receipt is deposited into one or only one account. You can have this also, and each account associated with a minimum of zero cash receipts has not like account receiver, a maximum of many cash receipts. This multiplication reflects the typical business practice, and then you have these multiplies depending on the nature of business. Some business require payments at the time of sales. Some allow the payment terms. Some provide revolving account for their customers, and some collect payment in advance of sales. So there are no typical multiplicities for this association. This is the end of the chapter, and I'll see you